Well, much like the market at this moment, probably looking at 1 to 2 cuts this year. So I think the Fed's communications would probably steer towards that. So not expecting the Fed's hawkishness that we've seen in sort of previous sort of weeks to rattle markets. I wouldn't expect a repeat of that this week. Something like putting hikes back on the table. That's something that would rattle markets. So we're not expecting that, but we are expecting that sort of hawkishness. 1 to 2 hikes by the very latest would be December. But I think there is a chance it comes before that if the wage data continues to show disinflation. Markets quite rightly sort of very nervous about the inflationary pressure at the moment. But I think looking at labour markets and wages, I think that could deliver an earlier start than December on rate cuts this year.
Got to ask you about the huge earnings parade that is coming through and the HSBC numbers. I know you can't speak about the bank specifically, but just really a starting point here. We're hearing from HSBC the announcement that Noel Quinn, the group chief executive, is going to be retiring after 5 years at the helm. We're looking to stand chart on Thursday. What has the wind been like in terms of the earnings that we've seen, and potentially if you have any comment on what we heard from HSBC just a couple moments ago?
Well, I guess I'd sort of formally rule myself out as candidate for next CEO. That would be my first comment. But look, the earnings season has been an interesting one for banks because that net interest income story has started to deteriorate. The costs for banks have increased. That sort of efforts to deploy for depositors to enjoy some of the windfall of higher rates has meant costs have gone up. But elsewhere in the banking segment, there has been earnings improvement. Sort of corporate activity picking up. So there are some tailwinds for banks. And in Europe, we're sort of seeing buybacks, dividends, some of that capital that's been on banks' balance sheets sort of being deployed, and valuations are very interesting as well. In the sort of shorter term, we're also seeing sort of a pickup in the manufacturing cycle, and because of Europe's greater sensitivity to that, much like Asia, that's a good news story for European banks. So European banks looking interesting, capital payouts, slightly better cyclical economic performance, and corporate activity picking up from where sort of net interest margins are ebbing away.